All right. Good afternoon, everyone. Uh, Myself, Chavan. I'll be the host. Welcome to yet another episode of Markets and Nonsense, and along with me, Rohit Srivastava. Rohit, you can all smile now. All smile. Let me tell you, 2 weeks before, 3 weeks before, you told market will bottom. Everyone had their self doubt, and you even went to the extent of saying V-shaped recovery. Everyone raised their eyebrows. We have seen a V-shaped recovery. 23,869, if it goes about 23,869, we are seeing a very clear five wave move on the daily charts. What else you can expect? Fantastic analysis, Rohit. I want to ask you one thing, before you know before we start. What was the thesis behind this calling out the bottom? Was it the sentiments? Was it the Elliott wave counts? What was it?
So it's usually a combination of both sentiment and Elliott wave analysis.
Hmm.
In terms of the timing and sense of it, uh, of course, there's when we write the long short report, which we did on the 15th of Feb, it took various macro factors into account that which are more of a longer term picture. So in the very short term, yes, it is sentiment and the wave structure. Once we are able to see extreme sentiment, all we were waiting for is wave C of Z to complete at the bottom end of the falling channel. The moment it happened, within a day of that, we are able to turn. This is what most people don't know, don't think. There's complete stupidity out there. Since we call this nonsense, so we can say anything. Stupidity means a whole crowd of people who think, number one, you can't time the market, you can't have an outlook on how things will work out or shape out. They think technical analysis is only meant for short term traders and not for long term investing. It's a whole lot of bullshit that has been propagated by the entire investment industry, which is sell side driven. Okay. The fact is, and this only in India, this also let me tell you, globally, if you speak to a hedge fund, they talk of fundamental, technical, everything on the same board, macro. But in India, it is like, no, no, no. There'll be guys who say, we don't look at macro, we only invest. And then there'll be guys who say technicals is nonsense. So these are all people who've propagated it. And that is why, it's very important that we go very loud on these turning point calls to make it clear to people that it's possible. I've had, years, so these are all published reports, years at Sher Khan of taking such market calls at turning points that where the market will turn Nifty, and successfully done it for, it doesn't mean we don't go wrong. But for the first 3 years, probably only, I had one which went wrong, one of the reports which went wrong. So it's already a published thing that I'm speaking of. So that is what we want to bring out by taking these calls. So when we said V-shape bottom, V-shaped recovery, and I kept thumping the table, is because I want people to hear it. And now when they hear it, they should also know that we were able to say that within a day or two, day of the turn. So then you have to understand, how can you be that close? How can you say it within a day? And that doesn't mean, so the guys who will come out now who will say, no, but you were also saying so at 22,800. Okay. The answer is yes, because there will be a stop loss. The problem is not whether you said market will bottom at 22,800, 700. But the question is, if it falls to 21,800, what are you going to do? Are you going to change your view? Do you have a method which will allow you to be as much more bullish that, yeah, this was the last leg and now you need to go all in? And that method exists. The method exists. The tools exist. Now we've made those tools and indicators that I've used for years available to everybody on strike at a throwaway price, I would say, of 600 and whatever you're charging them. Because the same thing in any international platform would cost anything less than $1,000 or $500 a month. So people don't know what they're getting, but that's the pricing that we thought was appropriate for the Indian investor that is just getting used to the idea that data analytics is everything, because you can't know when there's a very large number of participants in the market. And I'm doing a long talk. The only way you can analyze it is through data. It's no more controlled by 1% or 2%. Sure, I mean, that doesn't mean there aren't big players in the market, but I have worked with some big players and they also get caught. So everybody gets humbled at whatever level they are. So in the end, it comes down to how good an analysis you can do, and believe that it is possible to do good analysis both on the timing side, and the fundamental side and the macro side. And the best part is if you can put all of that together, then you have a beautiful outcome. So back to the point, yes, we were able to call that on short term. We were able to call it on wave theory and sentiment. Medium to longer term, the view we are taking will be on a combination of all the tools. So
Yeah. 23,869, if it crosses, it's a very clear five-wave move. You know, that's going to be a massive thing. I mean, considering what the market has gone through last 5 months, the first five wave is always like huge, isn't it? I mean, this is where you get a massive clarity on the markets going forward from a medium term to long term picture, until unless it's not a 535 ABC X wave or something. So you know
the 5 wave by itself cancels out your X wave.
yes, absolutely correct, but it can always be a 535.
We can get caught in that idea. So you remember
But still, Rohit,
2022.
yeah, yeah. But still, sorry, I've not completed. Even though if it is a ABC, even if it is 535, we have just completed the first five. So still C wave
Yeah,
is left in that
yeah,
case. Yeah.
yeah. So
So
that
that's
is one part.
massive.
Yeah,
Mm.
yeah. So one part is that there is still something left, and
Yeah.
the other part is that uh, will the next leg down still be part of a consolidation? Because moment you go beyond 61% retracement, so that's at around 24,630 is 61%. Moment you go beyond that range in an ABC also, then you are saying that this is not your larger bear market in force. It may be a more of a WXY kind of a sideways consolidation. So then also it has a more bullish posture. So that is why I was reminding you of 2022. You remember the first rally happened till
Mm.
from June 15,200 to September. Then we got a small correction.
Mm.
Okay, whether it was four or not, we'll debate separately. But
Mm.
then you got a third rally into December. So
Mm.
at that stage, that rally went on to a new high. So when you get a move like that, that means the eventual structure changed from being that, oh, it will go to 61 and then crash to new lows, to no, it's only going to be sideways, which is why the bottom in March of 23 was higher than the bottom in June. So that is what I'm trying to say. So once you get past a certain point, so even if this 5 wave move is ending somewhere here, you know that wave C is going to go higher.
Yeah.
You already changed the whole form. You're not going back. See, basically, you're not going back to 21, 800, 700. That is the main point.
Mm.
X or no X, you're not going back there. That is the point.
But just wanted to ask you, how strike has really helped you, especially in sentiment indicators. This is what you follow the most. Of course, your RMI is there in trading view also, but it's there in strike also. But how far this, I'm sure you were last 20 years you were maintaining it in a form of a Excel sheet, but visually representing along with Nifty, it it gives
So,
so much of clarification to traders and investors. When everyone was saying you cannot catch the bottoms, I'll say confidently today, boss, use our sentiment indicators, you'll be able to catch the bottoms.
yeah. Yeah, and especially when the swing is live real time. So one
Yeah.
thing is automating. So my work has reduced. No more maintaining Excel sheets, though we still keep the data. Jay is keeping it at the back end. But I don't have to now manually maintain it every day and update it every day. And I've not done it for a while. I do it like once in 2 months just to have everything in place. Whereas every day it was a daily routine, that you have to do it. Otherwise, you can't see the indicator on the Excel sheet. Where is it? Where is it? Even though we were plotting it on the Excel, but now I'm able to draw trend lines, trend channels, and look at all those things, log scale. So great stuff. And the other part I was mentioning is now that it is live, your diffusion indicators, including swing, which is also an indirect diffusion indicator, when it is live, I've been able to catch some points which are intraday, which was not possible earlier because we were only running swing end of the day before it was
Yeah.
on strike.
Mhm.
So like on election day, now people don't remember last year on election day when the Nifty fell 1,300 points.
Yeah.
Intraday the swing had reached 3. It
Three.
didn't close at 3. Okay.
Correct.
So when it reached that kind of a crazy level, we are able to put our hand down and say that okay, it's done. It's not just
Mm.
that you're at a support level, but you also got a swing. That has made it really possible to do some kind of good timing in the short term also.
Mm.
So yeah, it is something that's open all the time. I mean, it's like
Yeah.
I don't use the browser version. I use the install version. Okay, and that install version is a separate tab, is always open at the bottom. So I'll
Mm.
always keep switching and either looking at the swing, sentiment, or diffusion. That is, so if every day, apart from if of course I'm studying a stock or something, then I'm going into other details. But this to every day, subah sham, many
Mm.
times we look at it.
Fantastic. So those who are watching us, go to web.strike.money, subscribe now, and start using the tool. Uh, I'm sure this is going to help you a lot in your trading and investment journey. Anyways, Rohit, now that okay, a V-shaped recovery has been done, quite a relief for you also. Uh, but my question is, what is the sectors? You said metals, and wow, metals is up like what 10% in the last 1 month. I don't remember, like 2 weeks back you told metals and one more sector in the same, markets and
Uh,
non
NBFCs.
NBFCs. Yes, absolutely. So you expect this to continue, PSCs and I mean, sorry, metals.
So I think so. The only thing is that out of all of them, I think metals is one where we can see a good recovery.
Hmm. Okay, there is a problem. 1 second, guys. Uh, just couple of minutes. There is a network issue, and Rohit is going to join back. Yes.
Yeah, I'm
Sorry.
having a problem because of all the roads in Mumbai people know are dug up, and
Mm,
the Geo network here has broken down. Yesterday, whole day, it just went
mm,
down just now. It just connected on the hotspot. So that's the big problem.
mm,
So what was I saying? We were on the sectors, and I was actually, while we were talking, I was trying to list out. So I'll just share my screen.
mhm,
I was using Strike to get the performance of the last month on the heat map. Okay, from the fourth, which is where we bottomed, the best performing sectors here are actually you have PSU stocks on top, which is also something I thought will do well.
mhm.
Metals is here at 9.38%, as you were mentioning.
Yeah.
And then there are financials. Okay, so there's a mix of stuff here. A lot of the oil and gas are actually PSU stocks, and then the
Mm,
commodities is also metals. So I'll merge them, and then you have financials over here. So these are the main sectors. I think these 3-4 sectors are only going to be the leaders, or at least they remain my focus in terms of leadership, because this is the value segment of the market. Okay, when we say value segment, what we are really saying is that this is where, when you look at historical valuation charts, they're all at -2, -1 standard deviation.
mm,
And in a market where people have been cribbing about valuations, this is where the money is going. So the new funds and new money is being deployed in the value arbitrage that is getting created. Now, that doesn't mean mid and small caps will not do well, but uh, yeah, this is where, if you need to chase large cap performance, you're not going to buy FMCG. And even though IT, I think, will do well in the short term, again, medium to longer term, I will not chase IT. So So that's the difference. Why you need to really focus on the value growth argument when it comes to the stocks that you're really picking.
Okay, fantastic. Uh, so, yeah, excited about the seventh batch of mentorship we are starting this Sunday.
Yeah, this is it's great. We got on board a good number of people who
Mm,
are serious about getting the entire learning curve, because what we do is start with basics and end with a complete understanding of how to put together all the knowledge in terms of execution. So many times people have asked me talk about this on Twitter and other places when they crib about a particular call or something going right or wrong, and I say it finally comes down to execution, and you
mm,
really have to learn how to execute. How do you make an entry? How do you make an exit? How do you position size? Learning that is a very, very critical part of the entire process, and I think that is what people will be getting to know. But first, with the basics, master the basics of not just charting, but how to analyze using Elliott waves, forecasting, and then how to put it together with the RMI to actually execute something. Because just the analysis is not enough, right? Finally, you need to make money, and for that, execution is what you need to learn. So that is the critical factor that will come in.
okay. So, those who are looking to join our India Charts mentorship program, I've sent out a link in the chat. You can just click over there and just fill up the details, and there is an inquiry box over there. You can fill out the details and our team will reach out to you. Uh, okay. Anyways, moving on, Rohit. So going forward, I'm sure, uh, any long shot report coming up, or you're
Yeah, I
still.
was working on it last weekend itself, and then it slowed down. But I am hoping that this weekend it will definitely get published.
Hmm, okay, fine. Anyways, let's take up the questions from the audience now. We are on the 18th minute of the show. People who are watching us live, you can start putting up your questions so that Rohit can answer. Okay, as of now, no questions. Rohit, anything to discuss on the US markets?
So I think with the lead lag, so what really happened is India topped out in September, US topped out in December, and now both of them have actually corrected. And
Hmm.
all markets one by one are picking up from here. So in Feb we were only seeing Europe and China pick up. Now the US market correction is also done. Uh, India is done. Uh, Today I published on Jakarta, Indonesia. That is also done. So
Hmm.
this will slowly become a very, very broad-based theme where all markets start to recover. The only differentiating factor will be that if the dollar remains in a bearish trend, that emerging markets will become favorites relative to the developed markets. That is the only thing that can happen. But this time around, developed markets have also really surprised on the upside. So I'm not sure whether there will be so much of a performance divergence. But it's nice to talk about, think about. At least we know that India has tended to stand out within the EM space. So definitely that should come back.
Okay. Shaunak Marathe is asking your view on euro dollar, please.
So the euros pulled back to the 20-day average. That is what I quote seeing it.
Hmm.
Will it pull back further? Maybe not immediately on a very short term basis. So I'm just going to share my screen again so that we can actually look at the chart of the euro. Okay. So this is sort of the setup. Okay, I've marked it as 1, 2, 1, 2, 3, 4 ongoing. So this fourth wave is sort of what we are almost completing here. Uh, just need another day or so to confirm that it's done. Once it is done, we should be starting five of three, right? Five of three meaning the third wave that started from here. And
Hmm.
if one and five are equal to each other, then that next resistance is closer to around 1.1077 on the euro dollar. So it looks positive to me overall, because the if I look at higher time frame like the RMI indicator on the weekly is bullish. On the monthly, it's not yet bullish, but we are struggling near the moving averages. We are, the 2040 moving averages are clustered around here. And I think it'll be important to watch if the month end we are able to get above both 1.074 and 1.083. That would be an interesting point. But yeah, monthly RMI is still going to take time. But the weekly and the daily wave count are both suggesting that the uptrend is still on. So I'm actually looking at this as a start of a new wave because the ABC correction which I've marked over here is complete. So this is beginning to look like the start of wave 3 longer term.
Okay, fine. So Saurabh is asking, can you brief about sentiment indicators? Wow.
Yeah, so sentiment indicators are basically a sense of where is the market, okay, where is the market, and how are people positioned. So so the positioning data comes from NSE every day, and we populate it, and we even adjust it for the changes in contract size, because essentially the positioning what we are looking at is index futures, and based on the position of in index futures by either domestic institutions, FIIs, client side or participant side, we are able to look at those charts, and I'm just waiting for it to load so that I can actually show it more clearly. I think the net speed is still a little issue. I hope you're able to hear me clearly.
Yes,
Okay.
absolutely. I'm yet to share the screen because I'm just waiting for your uh, net to get sorted out so that I can share your screen.
No, but I have, acha, okay. I'm trying to, okay. Because my end, I have, okay, started sharing. Yeah, it's still not showing. I don't know.
Okay.
Basically, strike. I think the trading view has loaded, but strike is still taking time to load.
Okay. Anyway, it's not an issue. Rohit, we can, okay. There is a webinar coming up on sentiment indicators. Saurabh, you can definitely attend it. We'll keep you updated on that. Okay. Anirban is asking, in the metal stock basket, given a choice, copper, zinc, aluminum, steel,
Yeah,
what is the one you are going to pick it up?
copper is leading the way, so it is the obvious favorite right now. I have been long waiting for aluminium to start catching up with copper. It has still not happened, but aluminium has, maintained a higher base. So I'm just showing the chart. If you can, share it.
Yeah.
You can see my screen now.
Yes.
Yeah. So this is the aluminium chart. So you can see it's been making a series of higher lows, from year to year to year. Okay, now it's at this trend line. So in that sense, it is showing a positive trend. But unlike copper, which is going straight up, aluminium is not really going straight up. And so that is the only issue with aluminium, that if it was going straight up, we could say it's also performing along with copper. But it's just waiting. It's waiting for its turn. And since it is at support, next few days might be important to see whether it actually starts building that momentum. But yeah, this would become the second. The others are still lagging behind. When we look at zinc and nickel, they are still much lower. They have not really picked up much. And so far, therefore, the commodity cycle is being driven mostly by copper, gold, silver prices.
Okay. Rahul Shetty is asking, can we assume that the market will bounce up now while RBI monetary policy ahead and we expect a rate cut? How do you think it will play out?
So I do expect a rate cut, first of all, because bond yields in India are falling pretty sharply. I put out a post on that yesterday. I've put it on Twitter also. Essentially, the 10-year bond yield, which is on my screen right now, the Indian 10-year, is in the third wave. It's like 1, 2, 3. There'll be a fourth and a fifth. And by the time that happens, I think the 10-year bond yield falls a little more, maybe towards 6.5%. I think that directionally is setting the tone for lower interest rates. And see, it's been happening for quite some time. It's just that the RBI was waiting for the inflation data to be more in line, or for maybe the US to start cutting further. But this is the trend of bond yields for quite some time. Out here, we did try to hope whether yields will go up with US, but it didn't at all. US yields went up a lot in this period, but in India, they didn't go up, and now they are falling. So it's clearly indicating that we need to have several rate cuts down the year. And I do think even in the upcoming meet, they may continue in that direction because the data is supportive.
Okay, fine, Rohit. Any ending statements before we end this?
This move is not over. That's the main thing to keep in mind. I think that was part of the question with the rate cycle. See, even though we've reached this previous high, this swing high, which is where the resistance is at around 23,800, the next move up, whether it's right away or whether it's after some more consolidation here, should get us to 61%, which is 24,630. And as you mentioned right in the beginning, it's going to be a 5-wave advance, which means that even that will not be the end point. It may just give us a pause in the overall cycle for some kind of consolidation, but eventually, even that will get surpassed. So the bias has to be in the direction of the major trend, irrespective of short-term corrections and all that come in the way, which you can try and maneuver. But you need to be on the right side of the market. Otherwise, you're going to be missing out on the opportunities ahead, which are for weeks or months to come.
Okay. So well and clearly, the bulls are back. Look for only Teji is what Rohit is saying. With this, let's wind up today's episode. Thank you so much, Rohit. Have a nice weekend, and yeah, of course, let's see. Markets going to ATH as soon as possible. We'll hope for the best. With this, let's end the today's show. See you next week, same time. Till then, take care. Bye bye.
Thank you.